right, from the inception of Bitcoin, from zero to the very first market cycle halving, because all of this right here, from zero to around here, is pretty much unreadable. The people that were into Bitcoin at this point weren't in it for financial gain. They were pretty much just in it for the project. But this right here, the way I measure the market cycles is with this pitchfork, is with these lows and highs, from market cycle low to market cycle top to the next market cycle low. Except here, I measured this, the very first one, for the low that we had on November 26, 2012. That was the date of the very first Bitcoin halving. The low was at $11.89 on index chart. Everything's on log too. And then the high was at $1,242 on November 25th, 2013. And I take those measurement, and I take that high and that low, and those are my coordinates for this fib retracement. And you can see that it came between the 382 and the 50% fib retracement. The low over here, it was on August 17th, 2015. The low was $162. So I use those are my three anchor points that I use from then on. You can draw that yourself on TradingView. You don't need a subscription to do it. Anybody can. And then these fib extensions that you see, that's how I measure the market cycle tops. It's the same anchor points for the pitchfork, and that's a shift pitchfork. But for the very first bull run that we really truly had for Bitcoin, I guess you could say this was it, but the very first bull run that I could measure with fib extensions would be right here. The market cycle top over here in 2017 was on December 11th, 2017. At $19,804. And you can see for yourself just how, look at how that pitchfork was drawn from that low down there to that high to that low, and look at the very top of that channel. The market cycle top for 2017 came really close to the very top of that channel. I wasn't there. I wasn't trading Bitcoin or into it at the time, but this is good for history. And then these green levels, this is what I measure. I use these for the next market cycle. One year later, remember December 11th, 2017 was our market cycle top? Well, December 10th, 2018 was our market cycle low at $3,124. And it also hit a line, or came close to hitting a line, on that golden pitchfork. The 0.618 line. Also, I measure these green fib levels, this fib retracement, from the low that we had down here at $162 to the high that we had here at $19,804. From market cycle low to market cycle top. It came down beautifully to the 382. the 38.2% fib extension. Fib retracement. I'm going to go ahead and do this so you can see it better. And this green pitchfork, you can see where I'm drawing the next set of anchor points. It's the same principle as before. I'll just leave that. It's a lot of lines on the screen, but I'm showing you what they all mean here. And you can see that COVID crash right here. You can see, what metric was able to catch the COVID crash? Well, look at this right here. March 9th, 2020, Bitcoin crashed and almost caught the market, the $3,000 market cycle low. Came all the way down to 38.80, right at the very bottom of that golden pitchfork. But for that bull run, that green channel is really what dominated, or what price reacted to during that bull run. It was that green pitchfork. Also, this is another important one. This is where if you were trading this in 2021, you would have known to have offloaded some of your Bitcoin in 2021 around 60K, because trend-based fib extension. Here's our price 1, price 2, price 3. You can see it's market cycle low, market cycle top to last market cycle low. And the 0.618 fib extension came to $60,911. The market cycle top on November 8th, 2021 was $68,997. So sure, it came up a bit above it, but it actually reacted really nicely over here in Q2 of 2021, but then extended a bit higher. It also hit the midline of that golden pitchfork before coming down and making that 2022 bear market. And of course, these fib retracements, they were taken from the market cycle low of 2019 to the market cycle top of 2021. And it came pretty close to the 50% fib retracement this time. It came to 14. It came down to 15,000 and what? 15,473. It came right in between this, closer to the 50 though. So we draw our next pitchfork at that market cycle low. You know the drill. $2019 market cycle low, 2022 market cycle. 2021 market cycle top to 2022 market cycle low. Same coordinates for the trend-based fib extension, and it came a little bit above the 0.618 fib extension. So back in 2025, when I was trading it, I knew anything above I was saying to myself, anything above 100, above this level, was worth shorting with proper low low leverage and proper risk management. Then everything above, I knew that everything above 104 was just extra for that market cycle. And then I forgot to show percentage wise. The percentages have been lower and lower for each market cycle for the drawdowns, and but also for bull runs as well. We're getting diminishing returns. Each market cycle is less significant than the last market cycle. The amount of Bitcoin that miners are being rewarded being cut in half every 4 years. Well, this is diminishing returns. Each one is less significant than the one before it. But ideally, if everything just kind of plays out exactly as it has historically for Bitcoin, then it should be pretty simple. We would expect a drawdown somewhere between 382 and the 50% retracement level, maybe even deeper, maybe even all the way down to the 618, which would be around 34,500. I don't think we're going to get that low. I think ideally, for me personally, we would get it around the very last week of November at around 39,500 or so. Hit the very bottom of this pitchfork right here, and it would also hit. I also have these trend-based fib times from the same coordinate style as the pitchforks. And the last week of November, it would come around. It would be the 1.382 fib time. It would be like the very last day of November. But generally speaking, I would say somewhere around Q4 of this year. Ideally October, 1 year after our market cycle top this year, which came at, everybody knows, it was October 6th. It was 126, 219. So what would we expect? Something like this. Anything can happen, but something like this. That would be for late November, or maybe somewhere closer to October, which is where everybody seems to be waiting for now. It would basically just be a repeat. If we were to get our market cycle bottom around October, it would be a simple repeat, and too many people are almost waiting for that. But the next market cycle, this is kind of getting ahead of yourself, but if we allow ourselves to speculate what the market cycle top for 2029 might be, we can use the same metrics. I would use the past market cycle low, 2026 market cycle top, and wherever we land, this is where I would put this at. So if we were to come down to 39,000, I would say anything in between this, but really anything above this level right here, the 0.618. So the lower we go, the lower I would expect the bull market targets to be. Ideally, we can just stay in the mid 40K region. If we bottom out here, if 57 point whatever K was the market cycle low for this market cycle, which I don't think it is, then I would be looking to sell or short around $210,000 in 2029. But that's way ahead of ourselves. Take one step at a time.